Good afternoon, guys. It's Workin bringing you a quick update on EOS. Hope you guys are having a wonderful afternoon. Actually, it's coming into evening here on the east coast of the United States. Anyway, I hope you guys are having a wonderful evening. We're looking at EOS to the US dollar 4-hour chart on Bitfinex, guys. And similar to Bitcoin, EOS is operating within this larger wedge. I've told you guys this in my last couple of EOS updates. We're getting a series of lower highs, higher lows. And as it approaches the apex of any kind of a wedge, guys, what do you expect? If you've been watching my videos, obviously you expect a major move. You expect a larger move. Now, that could be up, that could be down. This particular wedge is not giving us any real indication of which way price is going to go. We know that EOS is a slave to Bitcoin to some degree, so whichever way Bitcoin ends up going, EOS will likely follow. That being said, guys, we're looking at at this point, we're looking at two major points of one resistance and one support. Looking down below, guys, we have this point of control. We're looking at our volume profile here. I'm even zooming out a little bit so you guys can see recent volume profile going all the way back to June. Pardon me, guys. We can see that this with the point of control. If you guys aren't familiar with volume profile, I'd encourage you to look it up. But basically, it just shows you where the most trading is taking place at a given price point, whereas volume, just general volume indicator, shows you where the most volume is at a given time. Volume profile gives you a given price point, and it does give you over a period of time, whatever that time is on your particular chart. In this case, guys, the two areas I'm looking at is right here. We can see this be the point of control, and that this is the area showing the most volume traded, and that's sitting at around $5, somewhere thereabouts. We can see that here. A lot of trading took place there. That's where I'm looking at the major support. And up top, guys, I'm watching this area right here, sitting at about 581, somewhere thereabouts, 581, 585, somewhere thereabouts, guys. That's the area that is providing some resistance at this point in time. So if I kind of zoom in here, we can see that's, again, that area is sitting right in here about 585, 583, somewhere thereabouts, guys. This is area that I've got blocked off right here is providing some decent resistance. If price can get above that zone, we do have a little bit of a supply zone right up here, guys. It's going to also provide some resistance. For those that don't know, I'm going to try to explain my terms a little bit more, guys, because I know some of you aren't familiar, and I don't blame you, unless you're a nerd like me. I mean, why would you be? Unless you're a day trader, of course, why would you be? Yeah, a supply zone is basically an area where there are a lot of sell orders sitting, or presumably a lot of sell orders sitting. This area here between about 615 and 595 looks like there's a lot of sell orders sitting in here. Price came down, came up, wick, broke right down, came back up, hit that zone again, broke right down. Tells you that it's executing a lot of sell orders right in here, and more than likely there's still some unfilled sell orders here, as indicated by this long wick here, by this strong rejection here. So that's why this is called a decent supply zone right here, guys. So if price does break up, I would expect it to find some resistance here, but if we look over here at volume profile, there's not nearly the trading that's taken place in that zone. Really, we have to get up to this zone up here at about 645 to 670, and again, looking over here on volume profile, that's when the next relevant area of buying and selling takes place, is right in this zone here, guys. And of course, that's confirmed if we look over here at our wick. We can see a similar pattern as we saw here, showing you that price came up, wick, broke right down. A couple wicks right here showing you that there are still more than likely some sell orders sitting up in here, which is why I call that not just a resistance but a supply zone. So between about 645, 670. The next major supply zone up above that, where there's more than likely going to act as resistance, and we can see over here with volume profile, once again it's showing, is right here between $7 and $7.30. And over here, of course, we can see that with our candles. We came up, wick, broke right down, indicating there's still a lot of sell orders more than likely sitting up here waiting to be filled, which is why it would act as resistance. Price may come up, fill those sell orders, come right back down. So what we're looking for, guys, I didn't mean to get off on a tangent there. I just wanted to explain a little bit. I always want to try to teach you guys, and for those of you that are day traders, please indulge me here, guys. This channel is really for all different levels of trading. I don't want to just focus on people that are average day traders. I want to talk to people that also that don't day trade at all, that are just kind of in this for crypto and hoping to make a little bit of money. So anyway, so price is sitting here at about 583, 571. If we do break above that zone, again, I'm looking at 614, somewhere thereabouts. That's going to act as a decent resistance. We're also getting a confirmation of that resistance by this descending resistance line, the top of the wedge here. And if it does break above that, guys, we would expect a larger move, a more impulsive move up, possibly finding resistance in this supply zone, but I believe it may come up, consolidate in this supply zone a little bit, and then end up impulsing right back up to this zone up here between about $7 and $7.30, and that'll be a major test if price does ever get up here. If we get a strong rejection, clearly that'd be a very bearish sign, but if it comes in here and starts consolidating in this supply zone without rejecting, that's going to be an extremely bullish sign, guys. Now, if and when this does break out of this wedge, it may not be today, it may not be for another couple weeks, but if and when it does break out, it will break out of this wedge, and when that does happen, you want to be careful. You want to watch out for a bull or a bear trap. In other words, price breaking up, possibly hitting the top of this zone, hitting this supply zone, and completely reversing course. That'd be called a bull trap, trapping people into thinking it's going high. People go long, and then market makers turn price right back around. The same is true with shorts or with bears. Price may break down. If price does break down, I'm watching this zone down here, 526, somewhere thereabouts. I do expect this to act as a decent support line right at 526. If we look in the past, it's acted as support there many, many times. And we can also, again, look over at volume profile. Just below that, we can see that's where our point of control lies. And it kind of builds up right from there. So there should be a decent support area right in there. But if that does end up breaking down, guys, especially if we do end up breaking down this 496 zone, which has been an extremely relevant support. In fact, if I come over here and I look at the weekly chart, guys, pardon me. If I look at the weekly chart, zoom in out, guys, that 491 zone back in here, look at this. For 5 weeks in a row, it closed at or above that 496. I think I said 491. That's 496. This 496 zone on the weekly, guys. 1, 2, 3, 4, 5, 6 different times, guys. Now, obviously, it closed right at 3 of those times out of the 6, but at or above that 496 for 6 weeks in a row. So that is an alternating each time. So that's clearly a very relevant zone, this 496. Now, it wicked through there a few times, but it was always pushed right back up by the bears, or excuse me, by the bulls. Now, if it does break below 496, again, look over at our volume profile. More than likely, it's going to come down, hit this zone here where it's wicked and touched many times. Let me go back here to the 4-hour, guys. You can see this a little bit better. If that does end up breaking down, more than likely, it's going to come down and hit this 473. And if price does break out of this wedge to the downside, this is the area that I would expect if it's going to be a bear trap. And by a bear trap, that means market makers drive price down, make everybody think it's going to go short. It's going to fall down to much lower prices. They trap people into short positions, and they turn it right back around and go long to liquidate those short positions. This is the area where that would happen, in my opinion, between 473, 476. It's happened many times here in the past. You can see it's happened 1, 2, 3, 4, 5 different times in the past, guys. This has proven to be a very relevant zone each time. I would expect that to happen again if it does end up getting to that zone. I'd be very, very careful of a possible bear trap if you are going short. If you're not going short, then obviously don't worry about it. But anyway, guys, so those are just the relevant zones that I want to make you aware of. But for now, we're watching it consolidate within this 571 to 583 zone here. If it starts to move sideways, we just hit that zone. If it starts to consolidate and move sideways, that's going to be extremely bullish. If it does end up breaking back down, guys, as long as it stays above this this zone right here, stays above this 557 support line here, that's fine. If it does break below that, again, I think we're going to come back and test possibly the bottom of this wedge, but definitely. And nothing is for certain, but probability-wise tells me that we'll at least come down to 526. This is the area that I would consider if you're looking to go in, looking for an entry point on EOS. This is the area that I would consider doing it, somewhere around 526, all the way down to the bottom of this ascending support line here, the bottom of this wedge. That's where I would end up doing it, but I'd have a very tight stop, knowing that price could end up breaking right back down if it does break out of this wedge. So, but if you're looking for a good entry point, that's where I would do it. Putting my Elliot hat on, guys, and I don't like to use Elliot wave. I've told you guys many times in the past. I don't like to do it in low volume markets, which this is a low volume market. In high volume markets, I love it. It's my bread and butter. But in low volume markets, guys, it just doesn't work very well. That being said, we are seeing some structure with EOS. I think I've showed you guys here this in the past. If I go swing low, swing high on this structure right here, what do we have? We got a perfect hit off the 786 fib level. 786 fib, for some reason with EOS, is a very relevant zone. Hit right back up. Pardon me, guys. So I'm looking at this, and we have 5 clear waves up. We've got a nice 1, 2, 3, 4, and 5 perfect nice waves up. We've got an A, B, and a C all the way down, hitting perfectly, very technically off that 786. And then look what we have here, guys. This would be starting our wave 3. So let me just kind of, for those of you that aren't familiar, Let me just kind of draw it out for you here. So I'm looking at this as a 1, a 2, and coming back up for our wave 3, which would extend much further than that, just to give you an idea of what we're looking at. Within that wave 3, though, we've got subwaves. We've got 5 subwaves within that wave 3, and I'm looking at this as completed possibly, if this count is correct, completed possibly a subwave 1, 2, we'd be up for the 3, 4, and 5, coming somewhere up there. That's if this count is correct, that's what we're looking at. Why am I looking at it that way, guys? Well, I mean, I can see 5 clear subwaves up, 1, 2, 3, 4, and 5 within this subwave 1. So that's for 1. I can see a nice A, B, and C. It's hard to see if you guys aren't looking very closely. We got a nice wick right down here. It's a nice A, B, C, and then that would bring us back up for our 1, looking at a 1, 2 little subwaves of that subwave 3. So again, guys, just to give you a quick, no, I'm not going to give you a lesson on Elliot wave, guys, but it'd be too long. But looking at Elliot wave, each wave has subwaves, and the subwaves have subwaves. So we're looking at this as a 1, 2 up for the 3. Well, within that 3, we've got subwave 1, 2, 3, 4, and 5. Within those subwaves, we also have subwaves. So if we're looking at this as a subwave 3, and again, guys, I know this may sound confusing to some of you, to others you're getting it. The more we talk about it, the more you're going to get it. But if we're looking at this as our 1, 2, 1, 2 would be coming back up for the 3, 4, and 5, and so on. Why am I looking at that possibly as a 1, 2? Let me zoom in here, guys. Well, we had a perfect hit. For obviously, it looks that way, number 1. But number 2, we're again seeing some very technical moves here. If I go swing low, swing high, what do I have here? We had a perfect hit right here off the 7/8 or off the off the 618 fib. That golden ratio. That's a nice perfect hit to begin that subwave 3. So that would be that. This is telling me that we may be seeing some structure. This may be we may be looking at a 1, 2, 3, and then that subwave 1, 2, 3 within that that larger primary wave. So anyway, guys, don't mean to confuse you. Didn't mean to get off on a tangent there. Maybe someday I'll go a little bit more into Elliot wave. But the bottom line is, if that count is correct, we might be looking at a rather impulsive wave up here in the not too distant future. What we need to get above is this zone here between 571, 583. We can see again, as I showed you on volume profile, we're seeing a lot of resistance right in that zone right here. If we can get above that, I think it could obviously we'd be coming into this zone here. We'd find a lot of resistance at 614, this descending resistance line here, the wedge. But if we can get above that, I think we'll very quickly rise up to 645 to 670, somewhere in this zone up here, in my opinion. Doesn't mean that has to happen, just means in my opinion. It's also relevant that we get above this resistance line here, because as I've shown you guys in the last 3 times, every single time price is retraced, if I look at this from a bearish perspective and I look at this from a swing high, swing low, what do we have here? Swing high, swing low. It retraced perfectly, almost perfectly, within a couple dollars of the 786 fib right here. You can see it retraced perfectly right there to that 786. If I go to the next structure, what do we have? I go swing high, swing low. Perfect hit right off the 786. Beautifully hit right off the 786. I forgot to show you. If I was to go back to the prior structure before those 2, 3, what do we have? Swing high, swing low. What do we have? Perfect hit, almost within a few dollars, again, right there at the 786. So that 786, as I told you guys, is a very relevant zone, not just bull, but bear-wise as well. It's showing both ways. So the reason I bring that up is if I zoom in here, obviously our microstructures are getting smaller and smaller as we get squeezed tighter and tighter within this wedge. That being said, if I go swing high, swing low, what do we have? So this would be our latest swing high. Go to swing low. We're looking right now just touched above the 786. The 618 fib, and we're starting to approach that 786 fib level from the for the first time since our swing low here. So we're approaching that. If we can break above this 786 fib level, that's going to break that bearish trend that we've been in for the last 3 swing low, swing highs, or swing high, swing low, I should say. That's going to break that zone. It could indicate a momentum shift in favor of the bulls. Now, it doesn't mean that has to happen. It just means that's something I'm watching, guys, and I will be very interested if price is able to break up and start consolidating into this $6.14. I do think that would be an extremely bullish sign if and when that happens. I'm not saying it's going to. I'm just saying this is why I'm getting so interested right here. This is the zone I expect to see a major rejection, or I expect to see us finally break above it and enter and possibly break this bearish pattern that we've been in here. All right, guys, very quickly, this video is getting longer, so let me go ahead and wrap it up here. But very quickly, looking at the daily RSI, we can see that it's created a series of, or excuse me, a ascending support line here. It seems to be following up. If that can continue, clearly that's going to be a very bullish sign. Let's wait and see if that, it looks like it's going to bounce off that very soon. If we can get a nice bounce off that, guys, that'd be an extremely bullish sign, obviously, if that does end up happening. Looking at our moving averages here on the daily, we can see we're just above the 8-day EMA. I'd like to see price above this 55-day EMA for a decent shift in momentum, possibly back towards the bulls. Looking at short positions remain relatively stacked, fairly unfazed. Looking at long positions are also starting to stack here just a little bit. Short positions have fallen off in the past, but are starting to stack here just slightly. So really kind of a stalemate, showing no real direction on long or short positions at all, which means the market is typically able to move freely. Of course, it's freely is relative because it is rather tied to Bitcoin. But anyway, so no real development on long or short. So I'm going to go ahead and wrap it there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I would appreciate an upvote. Just lets me know you'd like me to continue to do these videos. Until next time, guys, please trade safe. Take care of yourselves. This is Workin, signing out.